All right, an economy alert now. This is a live look at Wall Street, where stocks ended back in the red as the markets try to recover from Friday's sell-off. Today, the Dow closing 184 points, the Nasdaq 120 points, and the S&P 27 points down. Let's give you a look now at our weekly exclusive series, our NewsNation Inflation Index, where we track the most common products you buy, breaking down the numbers to show you how prices are fluctuating in the top 10 states hit hardest by inflation over the past year. So here's a look at today's prices for eggs, bread, and milk. Eggs nearing $4, bread $3.34, and milk $4.34. Now, eggs have gone up 4 straight weeks, and they're up another 5 cents this week, up 38% from just a year ago. A big drop, though, for bread. Prices down 48 cents for the week, still up, though, 14% from a year ago. And milk up a cent, but up 16% from a year ago. So here's a better perspective on how prices fluctuated this month. Bread prices hovering near $4 for weeks before dropping off. Milk prices back to what they were at the beginning of this month. And you can see those egg prices have slowly inched up week after week. So joining us now to discuss today's stocks and the market's future, NewsNation business contributor Lydia Moynihan. Lydia, thanks for being with us. All right, the market's seeing yet another sell-off today after Friday's massive losses. What does this mean for Americans who maybe don't necessarily follow Wall Street?
It was not the bloodbath today, fortunately, we saw on Friday. But sadly, you can't ignore what happens on Wall Street, although sometimes it feels like you want to when we see the Dow drop 1,000 points. For anyone who has a pension fund, a 401k, any sort of retail investment account like Robinhood or E-Trade, you're going to see that dip down pretty precipitously the past few days. But of course, there's always a lot of ebbs and flows in the market. But it has been a pretty dramatic sell-off. I like to match my outfit to how the Dow performs.
Oh, we certainly don't want to keep seeing you in red then, Lydia. You said there were these ebbs and flows. So we saw this rally earlier this month, but what do you make of this sharp turnaround now?
It was pretty inevitable. We saw the market really decline on Friday, and that was in response to Federal Reserve Chairman Jerome Powell coming out and saying that he was going to forcefully use the tools at his disposal. There likely will be pain in the economy in the near future. And that obviously sent a lot of jitters into the market. He basically indicated that he would likely continue to hike interest rates next month. And as we've talked about in this program, it just creates a sort of ripple effect across the economy that slows growth. Businesses are less inclined to take out a loan if it costs more money, as are individuals. So we are kind of in a period of contraction. We've seen GDP decline the past couple quarters. And so I think markets were optimistic that maybe Jerome Powell would say, things aren't going so great. Don't worry about interest rates. But that's not at all what his message was on Friday.
Yeah, not at all. Okay, so we're going to see that likely interest rate hike yet again. So let's look long term now. With the state of the economy as it is right now, should we expect more volatility with the markets? Other sectors, should we expect to see you in red a little bit more, Lydia?
Well, maybe part of the problem is that I wear red, and that has some sort of impact. I will certainly be spicing up. Yeah, I mean, for the next few months, a lot of market experts expect to see volatility. I do want to note a lot of times at the end of the summer, people are on vacation, which means there's actually substantially less volume in the market. So that means the past few weeks, things can have a much more dramatic impact than they normally would. And so a lot of economists actually don't give quite as much credence to what we're seeing the past few weeks in terms of a market sell-off. And they expect once we get more volume come September, maybe things will even out. But until we really get inflation and interest rates kind of more normalized, it does seem like we will be seeing a lot of volatility.
Yeah.
But volatility means we can go up some, too.
All right. So, yeah, a little bit of a rocky road, but maybe some good news. Okay. Lydia, thank you. Well, thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.